All right. CRT, we are live. Are you ready to kick this thing out, brother?
Let's do it, man.
Let's do it. All right, what to do, KTTV? This is KT, and I am coming at you live with another episode of the AdminisTraders Podcast. This is KT and my other half co-host,
JoJo, baby. How y'all doing out there today?
Look, man, before we get this show started, I just want to say, give a big, I ain't even got the words for it right now, to Merrill Lynch for today. I hate y'all for playing with my money. Now, let's get this show started right, man. How you doing tonight, brother?
Yeah, I'm good, man. You know, everything's good at work and just trying to get this stuff hired before we go on break. And, you know, man, great in there.
That mad dash, brother. Our mad dash. Look, man, it's here, though. It's here for break. Our last day. Dude, we got best practices Friday, bro.
Oh.
Bro, what kind of torture is that, bro? But look, man, what's the plan for the summer, man? We're about to get ready to get out of here. What's the plan?
Man, you know what? I'm gonna do a little bit of trading. Well, I'm gonna do a lot of trading. And
a lot of trading.
Gonna go down there and try my luck at the casinos.
Look,
I said
man,
casinos,
one way or the other.
You know.
So where you gonna go, Vegas?
I'm going to Vegas, and then I'm gonna go down to Kashada. So
come on, man, let them roll, baby.
Let's go out there and, you know, just make it happen.
Look, man, for me, the biggest thing is getting the day set up, man. For hold on, wait a minute, man. You know I like to get a shout out, but really getting the day set up. We got Colorado pulling up on us.
Okay.
So Colorado will be here. Then first off, big shouts out to Tipsa. So I'll be doing 2 days in Tipsa, 13th and the 14th. I got 2 sessions. PowerPoint is on point.
Oh,
so we ready to roll everything. Say, man, look, I'm gonna show up that day. I hope they ready because it's about to go down. But other than that, man, we got the Colorado. May slide out and do a little California. I thought about Mexico, but I think I'm gonna hold tight just because of the time stretch.
Yeah,
we got that month in some kind of way, man. I still want to sit down and kind of relax, bro. You know, because we coming back a little earlier this year, of course. And so, hey, man, we got a few things that, hey, just ain't gonna be the same way it was, man.
Oh man, absolutely.
Know? Yeah. So other than that, though, Monday, how did this Monday treat you in this market, man?
Well, today or this week, or today is Monday, huh? But yeah, today we were good with was able to make some quick sales this morning. And then the market caught fire for a little bit. And then, you know, I was hoping, the way I was looking at the charts last night, and you'll see it a little bit, the numbers that I was contemplating today, I think were pretty much spot on with especially with the S&P 500 SPY. So I think I was able to get some of that leftover money from Friday before it went down too much. And then I was able to add, and I opened some new positions for SPY when I had downtime at work. You know, did some August. I did some August calls. So, and a quick turnaround for June 21st to see if we could just, you know, make some money on an up and up tomorrow.
Man, look, man, it's too close, man. I'm afraid. That's June 21st, man. Crazy. It's too volatile out here, man. So for the night, y'all, make sure y'all stay locked in. So we got everything, all of the usual segments. So we'll look at trading with Ortiz. We'll look at our fear and greed heat check index, man. And so just going through everything. We took a little break. We had the holidays come up, so we're back at it tonight. Money is being made out here, y'all. Please know that interest rates still on the table. Economy is kind of weakening. And so remember, we were at a point where bad news is good news because people just been spending too much money in these streets. And so now that they're not spending as much money, we kind of seeing, like I say, consumers have started easing up. Retail is kind of slowing down. When Starbucks slow down, it's rough out here in the street.
Oh, yeah.
So Starbucks is slowing down. Lulu starting to pick back up, but of course we know Lulu's gonna slow down because nobody's buying $100 yoga pants no more. So let's see what we're gonna do. So make sure you stay locked. First thing we'll do, because we got a big week coming up, let's jump into some news. Rock, and you do not know what's going on this week. We have two big stock splits. If you go back and look at the previous shows, I've talked about both of these stock splits, but now that it is here, let's re-up one more time, kind of talk about what's going to happen, and what you can do before or after the stock split to get the bag up. So we know NVIDIA will be splitting, I want to say Monday. If you have one share of NVIDIA, you will then have 10 shares. And so I'll give you the background on the stock split. So what's happening is NVIDIA is $1,100 a share, right? And so companies that take in the investor in mind always say we are so high that the average investor cannot be a part of our issue that we got going on here when we trying to give everybody the bag. We know that NVIDIA is an AI leader, and so their stock will only keep going up as the world revolves more around AI and what they can do, because NVIDIA makes the chips that's going to power all this AI. So NVIDIA stock will go from, like I say, if you have one, you'll get 10. And so at $1,100, what that'll put it at, 111 per share?
Yeah.
Woo! But
that's tempting.
Hey, that's tempting, bro. That's tempting. Right now I got 20. I'm just gonna hold tight, bro. I'm holding on for dear life, baby. I'm holding on for dear life. All right. So next, so we'll talk about that. Next we have Chipotle. So we know Chipotle will be splitting this week. For Chipotle's split, it is one share will get you 50 shares. 50 shares. 50 shares of Chipotle. I've never been so excited, man, to serve up bowls and burritos in my life, man. But we're going to do it, man. So we're going to grab us 50 of them. We're going to get us 20 NVIDIAs, and we're going to just let it ride for the next 5 years. That's my plan, man. We'll see what happens in between, man. So let's talk about what this looks like today. NVIDIA and Chipotle both have stock splits planned for this month. Two of the most sizzling stocks so far, according to the Motley Fool, are Chipotle, which is down today, 1.7%, and NVIDIA, which was up today, 4.89%. So both companies have solid business performances, but they also share something else, and that's some fueling that's heightened by buying activity. So NVIDIA and Chipotle have upcoming stock splits in June. Please remember that, people, right around the corner. Matter of fact, this week. So with each shares continuing to soar, investors may be hard pressed as to which company represents more compelling position in the long run. And so if you go to this article, what they did was they put out a case for NVIDIA and a case against NVIDIA on why you should or shouldn't buy before the split. And they also did the same thing for Chipotle. And so let's look at what they said on making the case for NVIDIA. It says, clearly, the last couple of years, we have witnessed outside growth compared to prior periods. And we know that, of course, with the notable trends, is that NVIDIA's growth is accelerating across both the top and the bottom lines. By generating excess cash flow, NVIDIA is able to reinvest profits into other growth drivers and bolster its long-term roadmap. It's estimated, and this is why it's so big for NVIDIA, it's estimated that they have an 80% share of the AI chip market. Just think about that. 80%. That's like when Tesla came out, dropped the EVs, right? So their leader is always going to have that head start, which means everybody else is playing catch up. So while y'all trying to develop chips to beat our best one, we've already worked on another one. It was an announcement yesterday. And so you think about NVIDIA's earnings was a few weeks ago. They've already came out with new chips. Yesterday, they announced that along with AMD. Woo! Big shouts out to AMD, by the way.
Big shouts
out. So big shouts out there. Hey, I know that AMD, man, is heavy over there in the Ortiz portfolio. So once again, the stock split will happen Monday. They may start trading at $100. If you have not thought about getting in, now is the time, right? Even if you want to let it play out for a day or two, kind of watch, see what happens with the stock. Because I believe if it does dip, it's coming back, right? Because 80% of the market, that's just like saying Tesla is going to stay down forever. They can't. It's too much going on in that company to make them stay down at $170 per share. Eventually, they got to go. They got like self-driving taxis that's coming out. Like you can use your car for a taxi if you want to. Mm-hmm. The next one is Chipotle. So we know Chipotle is known for the tasty burrito wraps and the bowls. With 40 million rewards members, Chipotle has undoubtedly built a loyal customer base who's fighting with Cava, but that's another story. One of the ways that Chipotle has been able to capture the attention of so many consumers is due to the investment in digital sales strategies. And so if you look at the chart right here, revenue was $2.7 billion. The gross profit was $741.85 million. And the net income, and this is every 3 months, dude. Let's put this into perspective. People was out here eating these burritos and these bowls, man. Well, you making $2.7 billion every 3 months, man. Dude, so similar to NVIDIA, Chipotle has been able to fund an extremely profitable operation. Digital sales have helped fuel meaningful margin expansion, which in turn has flowed to the bottom line. And remember, that's what it's about, the bottom line. Although these financial results are encouraging, Chipotle does carry some risk. So you think about the macroeconomic. Remember what we just said. Right now, what's going on? Economy is getting rough. Hey, will people still go out and buy $16, $15 burritos? Or will they pull back because money is just tight? Right? So that's one thing that can happen around the world. We need chips. The company's going to buy chips. We got the CHIPS Act. Not as big a strain on NVIDIA because of the economics. But when we think about people going in to buy the Chipotle, consumer discretionary trends are highly sensitive and can fluctuate from year to year. So you got to think about that as a dynamic as it relates to the long-term growth of Chipotle. What's going to happen? So maybe we'll slow it down a little bit. Maybe. Once again, do you know anybody like Chipotle?
Don't nobody like them?
Yeah, they do what Chipotle do.
Oh man, no. Except for that cover.
That's what I'm saying. Oh. Okay, but that's different. That's different.
It's a little bit of a different market though. When it comes to the flavor of the food.
Me, man.
Yeah, man, what happened?
You would have made $671,728 since 2005. Wow. If you just put $1,000 in, bro.
Wow.
Wow, bro. This. All right, man. So I will tell y'all before we wrap it up, man. And what you got to say about that, Jose?
You know, stock splits have been historically successful.
Yeah.
We made it through Tesla, and we also made it through Apple, and so they've been extremely successful in the past with these, So I think they're just going to keep continuing, because I think one of the biggest things, like you said, is for the customers, for the average customer to be able to enjoy getting in the stock market, um, to reap the benefits of it.
Yeah. And so especially at $100, because when we think about 1100, like I say, I remember, I want to say last year having Nvidia at $122. And so now for it to run up to 1100, bro, that is flat out crazy. So like I say, I do have both. I'm gonna hold through the stock split, and then I'll see what's happening. I do have stop losses intact though, so if it get crazy, I probably will get out of there, let it drop a little bit, then I'll come back in. Because if you think about Nvidia, it has went up 100-something% over the last year, right? And so it's only a matter of time before it's a buy the rumor, sell the news type of situation. And so don't get caught holding the bag. But long term, Chipotle is going to be very cheap. Right now, Chipotle is $3,076 per share. And so then when you get 50, man, I don't even know what's the math on that, man. I don't even know the price of that thing, man.
It might
but
be
just
60.
know about $60. I think so. That's why they fight with Kava right now, man.
Let me see.
Yeah, it could be about 60.
Yep.
About $60 a share.
Yep. Damn.
Man, I'm keeping all 50 of them things. We're going Chipotle, baby. I don't think they got dividend though. I don't know. But if they do, I'm up. All right. Let's take a break real quick. When we come back, let's get into this heat check. Let's see what's happening. Then after that, we're gonna get into some charts. Jose got some good stuff for us today. We going straight for the money. We tell y'all every week the money is inside of the charts. Read these charts. So Jose gonna switch it up. Ain't no PowerPoint today, man. We going straight for the charts, baby. So keep it locked. We'll be right back.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the...
All right, so what we'll do, let's go ahead and get into a little bit of this heat check. Woo! All right, we had heat check, people. I've been looking at this chart for the last few days, and what I see is the same thing that's happening. A high percentage of the stocks in the S&P are red. Let's see who green today. Of course, Nvidia. Meta popped out today. I didn't even see that today, man. 2% today. But when we look at our big boys, we got Berkshire down, we got JP down, we got Amazon barely moving, we got Apple barely moving, Microsoft in the red. So, man, what are your first thoughts on looking at this chart?
Well, I think exactly like you said, when you have those reds over there in the finance area, I actually was looking at JP Morgan Chase, and I don't know why I like saying that name like that all the way. But yeah, I was looking at that JPM today. I didn't pull the trigger on any, but I did have it. But I think one of the things that we need to emphasize too is it wasn't red all day like this. So we had a very good morning type of thing, and then we just went red. Nvidia, of course, led the charge all day, but Tesla for a while was cranking today, as well as AMD. And as you can see up there at the top, AMD ended up closing a negative 2%. So at one point, AMD was probably up 4 to 5% today. I was able to sell some of my calls for that, but I think you have to look at the chart like this and think about, well, man, where are we whenever KT brings up that fear and greed? But I think if you look back to Friday's action, Friday was a relatively good day for the market. S&P was good. So, depending on exactly when you start dissecting the amount of actual red and the percentages of each red item, you have to think about that percentage. You kind of expected it to be a little bit of a down day at some point today.
Yeah. Look, man, I will tell you, I switched up yesterday. So for me, each week I try to get better at one thing, right? As far as with my trading. And so what I've been doing is I've not been riding the trend, leaving too much money on the table. So I switched up my entire trading strategy, brought in some different EMAs, and I was able to ride the trend and just kind of see, okay, things are going up, but oh my God, that trend can change so fast on you until you have to grab everything. But the big piece about that is knowing how does that trend play in with your heat map and everything that's going on, right? And so you can look at those stocks that's running and just kind of know, okay, I see Tesla on a tear this morning, but then what happens when those EMAs start to cross back over? Then I know that it's about to head down. One that really hurt my feelings was Netflix. Netflix, right? So what's going on is I'm really seeing that Netflix is really being supported around 630. And so that's kind of where it hung out today, kind of around 629, 630. I didn't get a chance to buy any because from looking, I could see that the trend was starting to pick back up. And so I had and I was even able to get on with Alpha today. And so I was looking at the trend. The 50 EMA was crossing over my 20 EMA. Or no, the 20 was starting to cross back over to 50. And so I was like, okay, we're getting ready to head back up. But right on top was the 200, and then it was the VWAP. I say, oh man, that's a setup. Don't do it, bro. Don't do it. And of course, I didn't do it. And it when it hit there, it got up and then got smacked back down. And so the move that it made today was pretty much at the last few minutes because totally this thing was down almost $14, $15 today. But the biggest piece is checking out this heat map, looking at my sectors, then going back, being able to kind of catch up on what's going on. Meta, got to pop out, look at Meta, got Oracle. Lily doing pretty good still, but we got a whole lot. Financials are struggling, man. And so once again, what's going on in the world around us, and that will tell you. We got all struggling, right? It's pretty much everything except tech is struggling right now. Yields going up, tech is struggling. All right, so let's look at what we got for fear and greed, man. What you want to do? You want to start us with this one?
So, if you notice, a week ago we were at neutral, and a month ago we were at fear. Now we keep talking about, where do we go from here? We were actually closer, to the fear side. If you look at the previous close, we were at a 48. I actually, if we wouldn't have had that run this morning, we probably could have dipped into more of the fear for today. I think we're in a good position. I do think we go north a little bit to the greed before we go back down. But either way, I think people need to be ready. I think that if you are looking to buy right now, I think you are starting to get in a good position based on the actual way that we're neutral. Because if we do move a little bit to the left and get closer to that fear, I do think that like we've been saying, it's that buy time. It's go time. It's time to get time. Get some put in there, and then you can keep adding depending on how far out you go and whatever your position size is. If we do end up going to that extreme fear, remember most people. Well, not most people, but the people who chase the money, when everybody's greedy, you are fearful. And when everybody's fearful, you are greedy. Words to live by when it comes to taking your profits. And that doesn't matter if you're a day trader, swing trader, long-term trader. The money is there. when you position yourself wisely with it, and when you take positions based on market, fluctuations, the money will be there. And so you don't necessarily have to be one specific type of trader to know that once we start to get greedy, you don't want to be buying when everybody's greedy and everybody else is buying. You want to be able to start, loosening up those positions. And, that's why we like to buy multiple options, um, you know, gradually getting in, letting it dip around a little bit. I rarely buy on the way up. Um, I've learned not to. Sometimes it's good, sometimes it's bad. But once a stock is moving past any type of price point that I've indicated to myself as too much, I don't usually go after. And sometimes it keeps on going. But for the most part, I don't like to chase anything once it's moving. So that's one of the reasons why people should be careful when it starts to get greedy out there, because you don't want to be left buying stuff that everybody else has been buying, and now when they start dumping on you, you're stuck.
Real. So I would just say the same thing I say all the time. Look, get in position, start evening out those positions, manage, get rich, get wealthy. Period. That's where we at. When the market is greedy, we're gonna get rich, y'all, because everybody is spending their money, everybody is making it. You got to be able to know how to ride those trends, get in, get back out. Same thing with extreme greed. The print is printing, money is coming. Woo! But right now in this neutral time, things are slow. I've been doing my journal, and so every day I can kind of see. I remember Thursday was the roughest day. That was the data. That was the day where it was like nothing. Other than that, man, it was pretty much locked every day except that day. And so you can always kind of follow those trends, kind of see where the market at, where everybody buying. But when we get back to greed, it's over, man.
Mm-hmm.
It is. Oh, hey. All right. So what we'll do, y'all, that is it for the heat check. I want to kind of get into some of these charts that Jose got for us. So what we'll do, let's take another quick break. And then when we get back, trading with Ortiz. Hey, let's go.
You see the drippy, I'm fitted up. Hop in my car and I get it up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and
Oh, wait a minute.
I love the chase and the hunt, and I set the pace when I.
Hold up, man. I'm trying to get it. Oh, all right, man. What you got for us today, bro?
All right, guys. So today what I'm going to do is we're going to kind of like put everything, we're going to begin with our RSI and our MACD that we talked about before. We're going to look at it on a live chart. What the platform that I'm using has easily become my favorite. Webull. I like buying in it. I like selling in it on the phone app. The app that I'm going to actually go into right now and show everyone is on the desktop, where you can chart things out. Your charts look familiar, look the same on the phone. You just don't have a bigger view of it like you will when I'm about to show you. It's easy. As we continue with the podcast, we'll go through buying and selling, how we, make those moves on there. But I'm going to start off with SPY tonight. We're going to talk about or look at some trend lines that I put on the chart, basically looking at the gaps that were either filled or about to be filled. Let's get started.
Let's do it.
All right. So let me. Oh, Lord, where's my... Okay, let me see. Can you see anything?
Nope. Got him.
Oh
Live.
man,
That's live right here for y'all. That's live. That's what we do.
Oh Lord, you can't, man, I can't see anything. Can y'all?
No.
Oh well, that might not work tonight, y'all.
Okay. Was you able to
Hold on.
share anything? Hold on. I can pull up this TradingView and we could jump on some SPY on here real quick if need be. And we can go back date or whatever time frame you need. Just let me know. I can switch it out for you. Here, I'm gonna pull up I'll pull up this chart right here. Boom. Boy, you look at that. Boy, that's work right there, man. God damn, look at that work right there, man.
I wonder why I can't get that Weeble in there.
Yeah.
Let me try one more time real quick.
Okay. And it should let you just share.
It should. Okay.
No luck on that thing.
So they got to go to system preferences. Check.
Oh, to be able to share out?
Yeah.
Okay. Okay. Well, while you do that,
while I do this, I'm
gonna pull up this SPY chart, man, and kind of talk through what happened today, y'all. So today was crazy, y'all. Remember what we said in our platform probing? We always looking to take advantage of what go on throughout the day, but you always want to make sure that you got your areas of interest identified, which is what Jose was going to show us today. And so when we look at these charts, and let me know when you're ready, Jose. When we look at these charts, we always want to find our lines of resistance and our lines of support. So if you remember what Jose said about that, when the stock is coming down, you want to see where will it base out and kind of find that support to say, okay, when it hit this certain amount, people will start buying. And so today, what we did, we came through. Let's go over here. Where we at today? Let's start where we at today. Oh my God. Right here, people. This is where we started today. So Friday, what was Friday? Friday, if you look.
Friday, yeah.
All right, and so this is Eastern time. So about 1:30 is when this thing started waking up. So if you look all that day Friday, we started and we just on a downtrend, right? We on a downtrend. We come up here, we pop up Friday morning, and then we started our downtrend. These are our 5-minute candles. 5-minute chart. So all of these candles represent 5 minutes out the day. So we come right here. Look where our support was. How do we know it's support? Because look how we started to form. Instead of going straight down, look at how we started to form and we started to go across. So that tells me that maybe the slowing pressure has stopped. The selling pressure has stopped. Buyers are going to come in. And what tells me that also could be the buy symbol right there. So when happens is, remember, it's all about confluences. What tells me to buy this stock? It can't just be one thing. I can't say, oh, it's looking like support. No. I got to say that is one thing that tells me to buy. Then this tells me to buy. And also I see right here, if you can look at that candlestick, right? And you can see that buyers were coming in, but boom, bam, buyer stepped in right here. Buyer stepped in. They look like they wanted to come back, but what happened? Boom. This lets me know right here, we headed back up. Because all I know is buyers came in heavy on this one. Because remember, the red candles go from the top down. This said no. And it closed right here on the line. And what happened? The next one, pop out. And once that popped out, we headed to the upside, people. Headed to the upside. So the biggest thing with this one is, how do you ride these lines? This is my 20 EMA. That tells me my trend. This is what I'm gonna ride up. And look what happened, y'all. If you just ride that trend and just keep on, it got a little red right here, but did it sell? No, it didn't. Did it break through? No, it didn't. So I'm gonna keep on holding. And I keep on holding, and then the next thing you know, pop. I just made all this money because I got my trend lines in point. How you looking over there, Jose?
Yeah, well, I mean, I can start talking about it, but I won't be able to share the screen though.
Okay, well, let me know what you need. Break us down with some of that stuff you checked out last night.
All right, so the one thing that I'm looking at right now, I'm looking at the 3-month chart, and the one thing that I put on the trend lines up there, you might have too. Our first area was 533.06, and then I was looking at 519, which is where it bounced off today. So my next area to go up would be to the 529. So we got about a $2 gap to fill.
Okay.
So we're looking at 529 to where we could get up in there for tomorrow. If we break that trend, we're going to be off to the races to around 533, guys.
533
would go up to that 533. If we don't break that, then we're looking at heading back down to the 518. Or the next stop would be 523. I'm sorry, before we head back down and further than that, around 521 and then 518. So our next area to get up to is 529.54, and then we can get up to the 533. If we don't hit that, then we can see us going back down to 522. Now, why is that important? Because right now on the 1-month chart, we are looking at a RSI, which is a relative strength index, at 58, 57.1, 57.54. Remember what we said a long time ago, 70 is overbought, and 30 is oversold. So right now we are at a 57. I believe
for SPY is a 57.
Yeah, 57.14 for SPY on the RSI. So that tells me that we got a little bit of way to go before we are over bought, which tells me that we could possibly reach that 527, and then we could potentially hit the 533 before the MACD lines cross, and we start to go into a down trend heading into the lower numbers. Now, when I drew those lines, and I'm sorry guys that y'all can't see them, I look at the RSI on the 6-month chart, and again we are on a 52.23, so it's a little bit better, and it actually looks like our MACD lines are going to cross into an upward movement. That's why I'm identifying that we could hit that potential line that we had up there, which would be 527. Around 528 would be our first gap to fill on the way up, followed by 533. So our levels that I'm watching for tomorrow are 529, 533, and if we don't break those, I'm looking at a 522.93, guys. So we could fill that gap down, and then if we break that resistance or the support there, we are heading back down to around 518. Eventually, I know that we will begin to go back down just because the way that our RSI is looking like it's up, and our RSI is looking almost a little bit sold or overbought. We do have a little bit of more ways to travel before that happens. So that is definitely what I'm looking at for SPY. If you look at these lines that KT has on this TradingView, charts are charts, whether we're using the Webull app or whether we're using, TradingView, Robinhood. But the one thing that I wanted everyone to understand and realize that when I looked at that chart this morning, or actually last night, the one thing that popped out to me was, in fact, that RSI was looking relatively nice for me. And so we had an RSI that was, around 40 when we started, and then we hit up, and then we just, like I said, SPY had a little bit of a jump today. And so we actually were a little bit over bought at some points today. So, I'm looking at those lines, get familiar with doing those gap ups and gap downs, because like KT's been showing you, those trend lines are your friends.
Hey.
Don't fight the trend is what we hear all the time. But when you start to look at your RSI and your MACD, you start to realize that you've gotten to a point of what you're looking at on the chart. I want to make one more note here too. If you look, if I go to the 5-day chart on the SPY, I can see an RSI of over 70. So when you look at that and you look at your MACD for the 5-day chart on a 5-minute, you can see that perhaps we will have a little bit of a down at some point tomorrow, expected early. But then remember those levels: 529, 523, 518, and if we break that 529, we could see a 533. So remember, your friend is the trend. The RSI is also your trend, but we use it all together. And right now, like I said, the biggest thing I'm looking at today, right now, before we go into tomorrow, is the fact that our RSI on the 5-day chart is at a 70.55, but on the 1 month, it is 57.14. So just remember those RSI numbers, because it doesn't all have to flow together. It just all depends on when you want to take those, to open those positions. So if you're looking to get into the position tomorrow, and get out tomorrow, you might be thinking puts. But if you are waiting it out early tomorrow for it to react to those specific gap fill up or gap fill down based on those trends and that RSI, I would wait a little bit, and then I could potentially open a position like I did today that could take me a month away from now before I can really trust that SPY will keep going up and down. So sorry for the technical issue. I will figure out how to get this Webull on the computer to where we can share the screen, because I really do like the way Webull looks. And so just to preface that by also saying that if I have to use the Robinhood or the TradingView, I will use either one as long as I can share the screen, because I think it's time for us to really, we've learned patterns, we've learned candlesticks, we've talked about the relative strength index, we've talked about the moving averages, we've talked about the VWAP. What long-term, short-term option buying is, what stock buying is. I think now by looking at these charts and becoming familiar with the trend lines, the support lines, the resistance lines, and using those tools together with your VWAP, with your RSI, with your MACD, is where now you can really hone in on building your skill as a trader. Because, we showed you the different chart patterns, the head and shoulders, the inverse head and shoulders. We talked about all the different types of candlesticks that are out there. But when it comes down to making those moves and making those trades, it is easy. I say easy, but it's a lot easier to spot those trend lines, those support lines, those resistance lines, and especially when you use them in relationship to the RSI. Because if you look at KT's chart right here, and you see that big blue line at the bottom, I mean, you've got to know what those lines mean, and that if I'm looking at that chart right now, and I see that, okay, if we go any type of down, I know that's the first stop that we're going to hit.
Yep.
If we start going down, we're going to hit, right around that red candle, where it says sell. We'll hit that first. We break that, we're going down. But the way that it's structured, when you put that together with the RSI, and you put together that with what you're looking at, it becomes a lot, easier to look at, and you train yourself. Because right now, if we're, one of the things KT and I were talking about this CRM was that it took a very big hit when it came down to their earnings last week, and now it's kind of working its way back up. But if you think about where it's at and why the news had it sell off like that, like we've always been saying, people tend to sell for, any type of news. And so you see that where it's gone, where it was, and how far it's coming from when it hit that bottom, so now we just, wait and see. And I mean, I believe it lost around $55 the day that it went down.
Yeah.
So
yeah, about that much.
So we have to think about now getting it back up. See those two blue lines at the top, followed by the blue lines at the bottom that KT has on there. So we're looking at, when you start to think about those gaps to fill, those are words that traders like us will say in relationship to a stock chart, more so than a cup and handle, more so than a head and shoulder pattern. Because with the naked eye and the eyeball test, you can always spot that gap. It's become something that we've trained our eye to see on the chart. I can easily find a gap up or a gap down more so than looking for a head and shoulders or a cup and handle. But it's kind of good to know all of them, because you don't even have to put a trend line on the chart once you become good enough to identify any type of gaps. And so you can get that confirmation about it once you actually put in the time and put in the work to label or to have your trend lines, your support lines, resistance lines, all that can go in there, and you can definitely understand it from that aspect.
Most definitely, man. Most definitely. I was thinking about look, y'all, I know Jose breaking it down, but remember what I told y'all. Just keep it simple.
Mm-hmm.
Just keep it simple, because this is very much an achievable game, right? When you think about, once again, where are you going to grow the bag, and you don't want to trade time for money, except for when you're researching this thing, this is pretty much it, people. I'm going to go back to this spot so you can really just see what we talk. Oh, my God, that's real right there. What is going on? Damn. That boy got them charts, man, them lines. All right, and that thing cleared up. So this is what we're talking about right here, people. Remember what we got: 20, 60, 200. So what I learned is this 20 right here is going to tell me everything I need to get the bag, right? When I'm going down here and this is falling, I know this is not where I want to be. This is not time for me to buy. But once I see everything come back up and I cross over back up on this line, this right here is where I'm going to take my shot. And even if I don't do it here, by the time I get to here, I'm shooting my shot. Because they told me to buy over here. But maybe I want to wait till I get confirmation and you close back above the 20. That means you just recaptured this trend, right? So when I recapture that trend, my God, it's time to go in. And so what happened? As soon as they caught this trend, I get in right here, and look, I could still ride it up to right here, close out. Just from right here to right here was about $500, $600 move. maybe $1,000, depending on what you got, right? These are how your $10,000 days are made in the stock market. Look, today we had a little situation going on. So everything went down. I'm still below my 200, so I still haven't regained my trend just yet. Everything is going. And the reason I say that is we can go up here, but then look at what happened here. Look what happened here. As soon as they hit that 200, smack right back down, right? But, oh my God, look what happened when I recaught that 200. I get the buy signal. I'm laying right here on my 200, and then I get a nice little elephant bar right here where we say, now I know buyers have showed up, stepped into the building, and we are over the VWAP. So all we waiting on now is a close above this VWAP tomorrow. And if we can get that close on the 15, or this is what I've been trading from. So we can get that popping. Oh, we did get that on the 5. Look at what we got on the 5, y'all, right? We closed above the 5. We sitting on top. So that tells me, like Jose say, is this going to be a little continuation tomorrow? Now we know when people come in, they're going to take some profits. But after that, though, I believe it's off to the races tomorrow, people. So we're going to see. We got a little data coming out. Oh, that's what we missed today, Jose. I wanted to kind of look at that data, man. Anything else you got for us on these charts?
No, let's go ahead and look at that data, man. I had to plug in this battery, though, on this laptop. So.
Hey, all right. So what we'll do is I want to kind of take us through what's going on this week. So I will share my screen. All right. Here we go. All right. So today, Monday, June 3rd, what we had this morning was manufacturing. So PMI. We've been at work 7 o'clock this week, so I don't know what's been happening with the data. Things was down today, so I take it was kind of meh, right? So we think about we had 50. I don't know which one is our predicted versus the actual because I don't have my the top of the chart, but it was pretty much in line with expectations, pretty much in line with expectations. So that's why we seen everything rise. Tomorrow, not too much information that's going on. Wednesday is going to be good. We'll have our ADP employment, productivity, trade deficit, PMI for flash U.S. services, and then on Thursday. Oh, my God, that's when it all starts. So initial jobless claims come in Thursday. And remember what we said, in the economy that we in, wanting to grow the bag, right now, bad news is good news because that's the only way we stop inflation. So almost you want to see, and God bless the people who this happened to, but you almost need to see a crash in those jobs, right? You almost want to see those claims go up to say less people are working, less people have discretionary cash, which means that inflation will now go down because people are going to stop spending so much money. So if I'm looking at anything, I'm thinking that this is going to be 219,000 jobs maybe is what they're looking for. And so we will see what actually happens this week coming out, right? Because last time I want to say we was 216. So let's see if we're going to meet him and come out. If we do, I'm pretty sure we'll get a good run because once again, if we see that the economy is not doing so well, rates will have to drop. And once rates drop, it's out to the races. Mm-hmm. This Friday, consumer credit, 8:30 a.m. before the market open, we got hourly wages. Remember what we want to see. We want to see wages either stay the same or go down, right? We want to not see people steady getting paid more because you get paid more, you're going to spend more, you're going to inflate more. Remember, right now in this economy, bad news is good news because we got to get these interest rates down. I want a new car so bad, but I refuse with this interest rate, y'all. All right. Then we got our unemployment rate, right? So once again, last time we did a match, it was 3.9%. Let's see what happens next. Then we'll look at hourly wages year over year. So all of these will be out this week. And remember, these are always potential market movers because if the economy is not doing good, then the Fed has to react. So the way they react is either they're going to hold steady or they're going to start dropping these rates. We want to see these rates drop so that we can kind of get back out here to doing what we do. But as long as everything's high, that means they don't want you to spend, and then they waiting on a crash to come. But it is a fine line between waiting on things to go down and then pushing us into a recession. Very fine line. And so right now they are trying to teeter this. Most people saying we will have a small recession this year. We hoping not, but we just don't know. Man, anything else before we close out on that, Jose?
No, that's a good segment. I just want to see if I can share my screen after that. So,
okay, so what you got?
Let me see if I can. Let me see if this works now. We're gonna find out. Dang. Nope.
Yeah.
All right.
Hey, look, man. Hey, man. Live TV right there, man. I told y'all how it go down. It could just happen different here. All right. So what I'll do, man, is that will do it for us tonight. If you have not, make sure that you like, subscribe, share this information, get locked into what we got going on. Look, y'all, money being made here. If you have not and you don't know what's going on, go back to episode 1. Get caught up, right? I got so many people, especially I think when we closed 10 last month, I put that out because just promoting for what we're doing. And so many people hit me up, man, how you do this? What you do this? Man, we'll go back to episode 1. Go look and find out, right? Go get caught up. And then, because if I got to do one-on-one with you, I'm going to charge you. I ain't going to lie to you. I'm going to charge you. Or you can go back and get this free game that we got on all these podcasts where we gave it out for free. Because if not, we're going to charge you, man. And we talking about, man, it's going to be nice. All right, man. Anything else before we close this thing out, Jose?
No, man. Just guys, keep sure, market awareness. Market awareness. Watch the TV. Get on our podcast. Get on CNBC. Just know the market. Know what's happening. Stay up with that financial news.
Hey, there we go, baby. Because I promise you, it will change your life. All right, this is KT and
JoJo, baby,
for the AdminisTraders Podcast. Y'all make sure y'all get locked. We will see y'all. Hey, we come back next week. What we got? We on vacation, man. We coming back from vacation. What we doing?
Man, we'll to be decided.
Oh, TBD, baby. Y'all have a good week. We'll see y'all. Get your money, man. And in the words of Lester Pope, take care of yourselves and each other. Oh, NBC, baby. We dropping them. All right, y'all. Have a good one.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
KTTV.
KTTV.